The computer chip shortage is something we've talked about for a while. Why is Intel the one bearing the brunt of this more than all of its other mega cap, large cap type brethren?
Well, we don't think that the reason for the weakness in the shares today, or really the problems that Intel has, really has anything to do with the chip shortage right now. The issue that Intel's been dealing with, and this is the reason we downgraded the stock to an underperform earlier this year, is that they're well behind in process technology. They need to catch up, and they've got a very strong competitor, AMD, that is now leading the market. What we learned from Intel last night is the massive investment that they will need to make in order to try to catch up. And this was Pat Gelsinger's plan when he came on board earlier this year. So what they said was it would be a $25 to $28 billion annual investment for the next few years. And obviously that has a big effect on gross margins. So really, for investors who are bullish on the stock, what you have to accept is there's a very, very strong investment that you'll have to make over the next couple of years, eating up most of Intel's free cash flow for what we think is an uncertain return. So we think that's the real issue at play here.
Is the dividend safe at Intel right now, given the free cash flow concerns and the allocation of capital towards capex in this kind of environment, Chris?
Yeah, I think right now I'm not particularly concerned about the dividend itself, but I will say in our model for 2022 now, we do have them burning some degree of cash. And certainly I think you have a scenario where they probably don't generate free cash flow for at least the next 2 years based on the investment that they're going to make. So I'm not they have a good cash balance. They have borrowing capability. I don't think the dividend's at risk, but certainly free cash flow is at risk now.
If you take a look at the competitive environment that Intel is dealing with, you mentioned AMD before. The competition for investing dollars right now is also big. Semiconductors have been a hot part of the market. They're not far from record highs as a group right now. So if you have an underperform there, where then do you go? Do you stay away from Intel and go to NVIDIA? Is it AMD, like you mentioned, from a competitive standpoint before? Are there other niche semiconductor companies that will outperform given what Intel's going through right now?
Yeah, so there's quite a few names that we still like in the space because, as you said, things are still in shortage, and the secular gainers are benefiting from that. In fact, AMD, as an example, we're quite sure if AMD had more chip supply and they use TSMC as their supplier, that they would be gaining more share. So certainly AMD is one of the places that we would go. We've been bullish on NVIDIA also. That's been a really good stock this year. They're also constrained, and right now they're going through a very good cycle in their gaming products, in addition to the data center product, which is what really drives the stock as a leader in artificial intelligence. And in that case, both of those companies would probably be putting up stronger results than they otherwise would right now if they could get more supply.
Also, one of the things we talk about with regard to the supply chain issue, Chris, is just how much the auto industry has been affected by this. Is that going to be part of a story for a while now for the chip shortages? Are we going to see those chips really start to, I guess, make their way back into the system? And how long do you think it takes before the whole supply chain issue for computer chips really starts to resolve itself? Is it next year? Is it not until 2023?
At this point, the consensus from the companies and the customers that we speak to is that we don't get back to any degree of supply-demand balance until the middle of 2022. And there is capacity coming online, but right now, as we stand here now, as compared to 3 months ago, the difference between what the customers want and what the chip makers are able to supply has actually gotten wider. So it is going to take a few quarters. What investors are worried about, though, in semis is a very cyclical industry, and anytime you have shortages like this, the fear is that they overshoot, they start to build inventory. And that's one of the reasons why the space has kind of traded sideways for a couple of months now, on that fear that when things are good, they get too good and roll over. Our view is the problem that often happens in semis, that overshipment that happens probably isn't for a couple of quarters from now. And auto is a great example because go out and try to find a vehicle, you can't find one, and chips are the reason. And it's going to take a while to just rebuild the inventories of the components. It's going to take a while to rebuild the inventory of the finished inventory, just so you have vehicle on dealers' lots.